You can easily enhance your income by working while you sleep. Passive income requires you to put in some early work, but not as much as your day job. It might help you reach your financial objectives faster or set bigger ambitions. Aiming for $1,000 in monthly dividends is a great goal, but it will take some time. In the short run, if you don't need the money for bills, you can let the dividends compound to $1,000 each month while buying more shares. Let's look at how to pick stocks that pay $1,000 monthly or any other amount that you require. But before we get started, don't forget to like this video and subscribe to the channel for more exciting content. With that out of the way, let's get started. How much money do you need to invest to earn $1,000 in dividends every month? Now, don't let these figures scare you off. We will tell you exactly how to get where you want in this video. To reach $1,000 a month, you'll need to invest between $343,000 and $480,000 to earn $1,000 in dividends per month, with a median portfolio size of $400,000. The dividend yield of the stocks determines the exact amount of money you'll need to invest to earn $1,000 in monthly dividend payments. So, what is dividend yield? It is the return on investment in terms of dividends. Dividing the annual dividend per share by the current stock price tells you the dividend yield. You'll get a certain percent of the investment back in rewards. Before you start looking for larger yields to speed up the process, consider that most regular equities have gains of 2.5 to 3.5%. Of course, this was before the worldwide 2020 crisis, so the range may flex as the markets swing. It also implies that you're ready to invest in a volatile market. Let's stick to a 3% dividend yield and quarterly stock payments for this scenario. This is typical for dividend-paying stocks. To cover the whole year, you'll need at least 3 stores. To make $4,000 per year from each company, you must invest $1,100 in shares. Divide 4,000 by 3% to get a holding value of $133,333. Add 3 to get the total portfolio value of about $400,000. It is not a tiny sum, especially when beginning from scratch. But before you go hunting for stocks with greater dividend yields as a quick fix, you may assume you can save time and money by looking for firms with higher dividend yields. Yes, in theory, but stocks with dividend yields of more than 3.5% are frequently risky. In normal marketing, greater dividend yields often indicate a company's issues. A reduced share price increases the dividend yield. Check the stock discussion on sites like Seeking Alpha to see whether the dividend is at risk. While everyone has an opinion, make sure you are an informed investor before taking the risk. If the dividends are cut, the stock price usually falls. So, you lose tips and portfolio value. That doesn't mean it happens 100% of the time, so decide how much danger you're willing to take. Choose your stocks to align the dividend earnings to each calendar month. Most dividend stocks pay out quarterly dividends. Some regularly pay, annually, biannually, or even less frequently. To build a monthly dividend portfolio with quarterly payments, you must buy at least 3 stocks that pay quarterly. Before you think this is impossible, there are 3 popular dividend payout patterns. Even if these patterns aren't identical for all stocks, they do provide an excellent foundation. The 3 dividend payment patterns are as follows: January, April, July, and October. Then there's the month after that, March, June, September, and December. Your portfolio will likely pay monthly dividends if you buy 1 stock per pattern. Of course, the footnote must be starred here to warn you that nothing is guaranteed. Payments can be shifted across months, especially if the employer pays at the start or the end of the month. Or maybe the corporation changes its payment schedule for some reason. It does happen occasionally. Number 1. Start smaller when starting from scratch. To earn $1,000 per month in dividends, you'll need a portfolio worth roughly $400,000. That can seem like a lot of money right now, especially if you're not converting an existing IRA. Instead, start with smaller, incremental dividend goals, such as $100 every month. Continue to invest and reinvest to reach your larger goal. Now that large brokerage firms have lowered trading expenses to nil, buying smaller amounts of stock more frequently is easier and more effective. Number 2. Invest in various stocks. Aside from the fact that you need to invest in various firms to cover all 12 months of the year with normal equity, $400,000 is a significant sum of money. Risk is reduced by diversifying the companies in which you invest. 3 stocks are betting everything on one stock. If one of the stocks fails, it will significantly impact the rest of your portfolio. Diversifying your portfolio by investing in different stocks allows you to acquire something at a lower price. Perhaps divide it up such that no single investment provides more than $200 or $250 in dividend income in a single month. Number 3. Look for stocks with consistent dividend payment histories. The only thing that is certain about the stock market is that it will rise and fall, and the only assured dividend is the one that actually paid out. As a result, stocks that have been paying dividends for a long time have a higher probability of continuing to do so. Long-term payers usually want to continue making payments in the future because if they didn't, their stock price would plummet. Changes in the firm or the market could lead to a change in the payout schedule. A merger or acquisition could modify the dividend strategy. Number 4. Double-check the stock's next ExDividend date. Check to see if you are eligible for the next dividend payment before you decide to buy your shares. The stock is trading without dividends on the ExDividend date. To be eligible for prizes in the future, you must own the shares before the date. Check the dates for the next ExDividend and payment ExDividends. Even if you aren't eligible for the next dividend payment, you might still want to buy the stock. However, depending on what's on your watch list, another stock might be a better buy right now. Number 5. Check what taxes you may owe on your income. You'll almost certainly owe more in income taxes and paperwork each year if you're making a dividend income portfolio in a conventional brokerage account rather than a retirement account. If you want to earn $1,000 a month in dividends, you'll need more significant investments. Confirm your situation with your best tax professional or the IRS. Number 6. Don't chase dividend yield rates. It's worth reiterating once again, high dividend yield rates in regular stocks could suggest an issue with the company, leading the stock price to drop. Re-examine your company's research. If you lose both your dividend income and your stock value, you will be working against your goal. Based on your research, you might still want to take a chance on a particular stock. Simply enter the market with your eyes wide open as a well-informed investor. REITs, or real estate investment trusts, are a type of stock that is taxed differently than regular stocks, resulting in higher dividend rates. Number 7. Reduce the risk by splitting your monthly payments among multiple stocks. If you want to earn $1,000 in dividends each month, you'll need to invest in stocks. Also, past performance does not guarantee future results. Even the longest-running dividend payers might stop paying dividends. Consider buying many stocks with similar payout patterns to lessen the risk of one stock failing. Maybe it's 2 stocks paying $250 each month, A Google Sheets dividend planner can help you structure and track your dividend earnings. Stock market investment requires doing the best with the information provided. You can correct the course in the future. Earning $1,000 a month in dividends is a great way to supplement your income or develop your portfolio until you need it. The intentional stock selection might allow you to collect monthly dividends. Make sure it's a good fit for your portfolio and not just your calendar. Remember to diversify your risk with diverse stocks. Investing $1,000 monthly in several stocks guarantees you won't put all your eggs in one basket. Start small and build your portfolio over time. Don't be frustrated if you can't generate a $1,000 monthly dividend income right away. And that's it for today, guys. What other suggestions for building a dividend income portfolio do you have? Let us know in the comments section below. Also, don't forget to hit that like button and subscribe to the channel for future updates. As always, thanks for watching.